Okay, welcome back to the South Florida Mortgage Report. It's Billy May, your hat dude wearing mortgage guy, along with Craig A. Garcia, president of Capital Partners Mortgage. And I got my special hat on today, Craig. I got my USS Fort Lauderdale.
You're bringing it.
I'm bringing it for a variety of reasons. We're a South Florida-based lender. I was born in Fort Lauderdale, and it's right nearby. And I did go to the commissioning of the ship back in 2022. Actually, I was at the ceremony, and I am U.S. Navy veteran, so.
I was going to say thank you for your service, sir. And today we have your background is perfect for the topic that we're covering today, and so we salute you. Hats off to you.
Thanks. Thank you very much. Hats off. And VA loans. That's the big topic today, right, Craig? And boy,
Yes,
there's a
sir.
lot of misconceptions out there about VA loans, right?
For sure. We've definitely heard from agents over the years, of all the years been doing this. I've heard numerous times agents that had nervousness about VA transactions, thought that they take longer, thought that they are very difficult to get closed, and so I thought it would be a good thing to get into this because
Is
there's a
it
lot
to
of
the deep
misconceptions.
dive? Yeah, to
Yep.
the deep dive about VA. We're going to talk about the good, and some of the myth busters, and maybe some of the challenges we might find. But first, we get into the VA loans. Let's talk about really what kind of opportunities do we have with veterans and veteran buyers. A lot of people are not aware. I mean, there are some statistical data here. There are 17.5 million veterans in the U.S., about 7% of the civilian population.
Yep.
Um, and most of these people are in their 30s and 40s. So these are active home buyers, and the income profile is pretty strong, right, Craig?
Stronger than people might realize. So the median income for veterans, this is back in 23, was about $52,000 versus $40,000 for non-veterans. So it's a significant difference in terms of percentages. So it's not a distressed buyer segment or anything. I mean, you're talking about higher income, motivated buyers have access to financing that other non-veterans do not have access to.
That's
And
right.
we have kind of said in the past, which I firmly believe, that a VA loan is the best mortgage program in America,
Oh yeah, yeah.
and
I've
probably the
heard you.
world, frankly.
I've heard you quote that, use that phrase for well as long as I've known you, and it's true. I mean, so. Yeah,
Yes.
yeah. I mean, where else can you buy a home with nothing down, have no mortgage insurance, get an interest rate that's probably better than the prevailing conventional rate right now, and have so much flexibility, and even have some other things that about VA seller concessions that people are not aware of that are just really kind of mind blowing.
What I hope is by the end of this, if you're a real estate agent listening to this, that you will actually go, oh wow, I didn't realize how much of a deal making tool a VA loan actually is.
Yes.
And not just that, hey, this might not be great for my seller, or I don't understand how this is different than a regular loan. So, yeah.
Absolutely, and we know our vast amount of subscribers that are our viewers are watching our YouTube podcast, and they listen to us on Apple or Spotify or watch us. Mostly our referral partners to the real estate industry. So we want to clarify some things for you. And first off, like you said, the profile, generally speaking, good borrowers. I'm a veteran. I'm
Yeah.
actually the chairman of my reunion committee for my ship. I get together with these guys every couple of years, and these are high profile people, good income. They might have a couple of residual income, and they have high paying jobs. And veterans are, by and large, good profile borrowers. So plus, you're helping if you're selling a home to a veteran. Listen, the veterans serve our country, and it's good for that. So,
I
but
mean,
yeah,
yeah.
yeah. But let's kind of so what actually is a VA loan, Craig? Let's give kind of the nuts and bolts, the definition of it.
Sure. So the VA doesn't lend money, right? The VA loan is made by a private lender, a bank, a mortgage company, but it comes with a guarantee from the U.S. Department of Veterans Affairs, and they're telling the private lender, hey, because we're going to guarantee this loan up to a certain point for you, protect you, the lender gets to do some things on this program that they wouldn't normally be able to do on other loan programs. So kind of like FHA is a loan that's insured by the government, so lenders get more aggressive because they've got this insurance. This is a guarantee, so
Right.
even better for the lender, and that's
Right.
why you can do zero down
Right.
for one thing.
Yep. And there's no mortgage insurance like we've said, like
Yeah,
conventional financing. The mortgage insurance now there's the VA funding fee. So let's
yes,
talk about the VA funding fee. That's it's well, let's go ahead and let's explain that.
yeah. So even though there's no mortgage insurance and there's no down payment, the VA does have incur costs to run this program and to run the guarantee program for lenders. So the way that they fund that, there is a VA guarantee fee that gets baked into the loan. A veteran can pay it at closing. Now that fee might be 1.25 to 2.25%. If they've used their VA loan before, it can be higher.
Yep.
And they can pay it in cash if they want, but the VA lets them roll it right into the loan. So
Right.
even though they might buy a $500,000 house, they have a 2% fee just to keep the number simple and it's 10 grand. They actually they'd probably start off on that property at $510,000 loan. So they don't have to pay
Right.
that fee up front into the loan itself. So
Yeah. I mean it's amortized over 30 years. It's very minimal. It doesn't affect the payment much, and it really. I mean, at the end of the day, I think most people today are hey, what's my money out of pocket? What are my monthly payments look like? And that's what the benefit is.
now we should mention the exemptions because there are that funding fee that I just talked about, Bill.
Yeah.
Does everybody have to pay that?
No, I mean if you're a veteran and you have a service connected disability, and it's a high number of veterans, believe it or not, that do, and it might be something
Fortunately.
minor like tinnitus or whatever. I always ask the veterans, hey, by the way, do you have your DD 214 with your honorable discharge? Do you have your certificate of eligibility? Most don't, and as a lender, we obtain that, but that certificate of eligibility is going to let us know kind of use they can have. Let's just say that, and if they do have disability, it'll state right on there. So, but if I ask the veteran, hey, do you have any other source of income? Do you have disability? And if they state yes, they're not paying that funding fees.
Which is amazing and
Yeah,
honestly well deserved.
yeah, yeah,
So yeah,
yeah,
no, that's incredible. So not even everybody has to pay that.
yeah,
Um, yep.
yeah.
And now what
And,
about?
and
Go ahead.
no, I was going to say another point, and you know, a lot of people don't know is that if the veteran's getting 100% disability, they will not pay property tax on their home. You know,
That's right. That's
yeah,
right. We just went through a little bit of a situation with a borrower and understanding when they're going to get that. And yeah, that's a great thing that the state does too
yeah,
for
yeah,
veterans.
absolutely. But let's talk about loan limits, Craig. I mean, it was like $725,000 was a loan limit, but that's no longer the case, right?
Yeah, no, the amazingly, this program, for a time, if you could get up to the conforming loan limit. So right now, this year, it's what 832,750, and you could get up to that with zero down. And then if you went over that number, then when there was a piece that you had to come in with as a down payment on top of that. But in recent years, that's actually gone away too. So no longer do you have to kind of eat a piece of that down payment over that number. Now, I mean, we've got investors. You can do a $2.25 million purchase with nothing down
Nothing down. Your mortgage
and no
might be
mortgage
payment
insurance.
right. Your mortgage payment might be $17,000 a month, and everything, every taxes, insurance, and everything. But you could buy nothing down. And,
Yeah,
if you have one of these high profile borrowers with lots of income, hey,
yeah.
that's a and the rate is very very competitive, especially when it gets to jumbos. So that's amazing. You could buy a house for $2.25 million, nothing out of pockets.
Yeah, yeah,
Very, very interesting. So
yep.
let's talk about some of the myths of the VA loan, Craig. Like, what are some of the obstacles, or what's some of the more, some of the things that the old time realtors, even new time realtors, maybe are not aware of, or they're scared of, or what they think what's going on at the VA.
Yes. So one would be appraisals, right? And I think that there is a belief out there, hey, VA appraisals are harder than regular appraisals. Now, there's a kernel of truth in here. One of the things that's different about VA appraisals versus regular appraisals is the VA assigns an appraiser. And so usually as a lender, we have a group of appraisers that we normally work with, and we vet those appraisers, and they're part of our panel. And we're the one that orders, or if we're going and using an appraisal management company, the appraisal management company is ordering the appraisal from their group of appraisers. But on a VA loan, you're ordering directly with the VA. The VA is the one that assigns that appraisal out. So sometimes a lender who maybe just has a core little group of appraisers that they work with on a regular basis, maybe on a VA deal, now you're going outside of that pool, and it might be somebody, and really that appraiser is more accountable to the VA than they are to the lender, who would typically be looked at as the client.
Yes.
Um, and so then, and because of that, there can be sometimes that can result in potentially a VA appraisal taking longer time on average than a regular appraisal, just because a lender may have a smaller group of people and send enough business to those people, they get some negotiated turn times and stuff like that, but you're really not
Right.
going to get that on a VA appraiser typically.
Yeah, and I think up until maybe the past few years, there used to be a little bit of a kind of a lag time with VA appraisals, but that's no longer the case. I mean,
Yeah.
I had one this week. We ordered it on Thursday or Tuesday, and I got an email this morning. It's already back.
Oh wow, that's
Yeah,
great.
so really, they were out there Tuesday. Within 2 days, it's back, and
Okay.
I believe the VA is holding the appraisers accountable. Hey, you got to get this a certain amount of time, et cetera, so they have to deliver it.
Sure.
So,
Sure.
um, but so that's interesting. And another big thing about the VA appraisals is that there's a lot more. If it's not going to come in at value, that's the really big difference. And we've had a couple instances with that recently, right, Craig?
Well, yeah, there's definitely one thing that's different about VA loans is there's this procedure that they do. Usually, you get an appraisal done, and you're not going to be aware of what your appraisal value is, or if it's going to come in at the value that you were expecting or not, until it shows up and it's completed. The VA has this process called the Tidewater process. It was based off a Tidewater Act, where if it's on a purchase and they see that the value that they're coming up with, the appraiser's coming up with, is not um, equal to the sales price, so the appraisal is going to come in low. If they see that, they are sending a notification to the lender up front. Hey, I'm giving you a chance to give me whatever information you want me to consider. I'm telling you right now, this appraisal is not coming in at value at your purchase price. So if you have anything you want me to consider, give it to me right now. Now, we usually have our agents, usually are telling agents, hey, listen, have your data that you want the appraiser to be aware of, any information that you have about your property versus other properties that have sold, comps, give anything that you can give an appraiser when you meet them at the property to help them understand what there is to get the right number. They should do that on a VA deal too. But even if what you're getting in this case on a VA loan is you're getting this second chance opportunity to give him something um, before he finishes the appraisal up. So that's pretty neat, and that's not something that
Yeah.
happens on any other loan.
Yeah, no, no. I mean, and before we get into the benefits of this, so let's some of the myths or whatever about or some of the things we should look out for. Remember, when the appraiser goes out there, like an FHA loan, they're going to all the everything has to be working. Water, electricity, et cetera, et cetera. They're going to pop their head in the attic if there's attic access to make sure there's no active roof leaks. They are concerned with safety, just like FHA. So they are concerned with those things. That is the things to look out for. The wood rot, the same thing. If there's wood rot, you need to clear a termite report. That's the one key difference with VA.
Yes,
You need to clear a termite report. Seller does not have to pay that. Remember, that was a lot of
used to
confusion.
be.
Used to be the seller had to pay the termite. Matter of fact, years ago, it used to be the seller had to pay those VA and FHA non-allowable fees, which were $600 or $700. But they wiped that out. I don't know, probably what, 15 years ago. That's been gone for quite some time,
It's
right?
been a while, but I definitely remember when I was first in the business. Every VA deal, we would always have to indicate the amount of the non-allowable. So
Right.
if you were a seller selling to a veteran in the past, you definitely had to pay for this termite inspection, and you had to have a clear termite inspection for that deal to close. And you, as the seller, had to pay it. You also had to pay certain fees that the lenders would charge that the buyer was not allowed to pay.
Right.
So both of those are gone now. So now there's the non-allowable fees charged by the lenders are gone, and now They just will follow the contract in terms of who will pay for the termite report. So
Right.
if the termite report has indicated that the buyer will pay it, then the buyer pays the termite report. If it's the contract says that the seller will pay the termite report, then obviously the seller's paying.
Yeah.
So
So let's get into back to our appraisal with this Tidewater thing, and so
yeah,
let's kind of do a deep dive, and let's talk about that recent issue we just closed that I just closed, because that's a good example. This was
yes,
that was say that this property was a specialty property, especially in South Florida. It was a attached home, townhome on a canal with ocean access, and the ocean access was less than 10 minutes away. This particular community, I think had about 75 units, and only I think 22 of the 75 had a deeded dock, deeded with the unit. Our particular subject property had the unit right behind the home, which not all of them were like this.
so you
This was
could
very
walk out the door and get in the boat.
right. And historically in the past, there's a lot of cash deals and so forth. There are people that have sold the separate dock slip but kept the home. And so when our appraiser went out there, and then he said, "Hey, Tidewater's is coming in really, really low,"
Yeah,
because the appraiser made the assumption that, oh, hey, these docks just come with the townhomes, and didn't really give it consideration. We provided the information that comes before he sent over the information, before he sent the report.
yep,
He disagreed with it right off the bat.
yeah,
Sent us the report, and we had a sale price of like this, and the appraised value was like way below here. And
yeah,
basically, it only gave us a value of the dock of like 5 grand. We went back, we did our research, we had the agent do some research and find out that, hey, some of these docks sell for 120, 150,
yep,
$175,000. And so we had to kind of go back. The veteran wrote a letter. The veteran knows the area as well, actually rents in the area. And the veteran put forth their information and said, hey, I believe I'm buying a good deal here. I've done my research. I'm going to have a boat. I need to have this, et cetera, et cetera. And how did it work out, Craig? I mean, we it was a win.
yeah. So there's the one difference here that also is unique to VA situations is the VA cares what the veteran is, what's in the best interest of the veteran. And so the veteran, in this case, was able to request another look by the VA at this appraisal. And so even though we had gone back to the appraiser, we had given him information before the Tidewater, when he gave us the Tidewater notice, and that didn't work. And then we did go through our underwriting, looked at all the information that we were able to gather, thought we had a case. The veteran wrote a letter to the VA saying, hey, we would like this reconsidered. And then we submitted the veteran's request along with the extra information to VA, and VA came out with a a directive to the appraiser to increase the value, and it was increased significantly. So
Oh, yeah.
yeah,
Yeah, and I mean, for the most part, the seller took a little bit of a haircut. It's in the phrase we use, but for the most part, all the parties were happy. It made
yeah.
sense. The veteran was happy, and it was just a win-win. It was really interesting, and you'll never see that on another type of product, I think, right?
Not that way where you've got this independent body from the lender that's going to step in and rule in a judgment like they did in this case because the relationship between the veteran and the VA. So I thought it's a pretty unique situation.
Yeah,
So
but it
yeah,
wasn't a one-off. This is not a one-off. I mean,
right.
we had another loan last year. I did was a multifamily
No,
property.
no, I mean unique to VA loans. That's what I
Yes,
meant.
that's
Sorry.
correct.
Yes.
That's correct.
Yeah.
So just so for our referral partners out there, VA has this flexibility. This is not a one-off type thing. I mean, so if you're considering taking a VA offer, don't get
And,
too guarded.
and in relation to that, this is the other thing I would say that if you're, so yes, there's this flexibility when it comes to the appraisal. As long as the buyer wants to move forward and believes that the appraisal should be worth more, then they can do that. But if you're that seller or that listing agent, and now you've got this VA buyer, keep out this. We already talked about the idea that the VA buyer, just because they have this primo loan where it lets them put zero down, doesn't mean the buyer doesn't have any funds. And so, if if it is an appraisal concern, well, guess what? That VA buyer, on average, is probably going to be a lot more able. Doesn't mean they're willing, But
Yes.
if there is this difference between what the seller wants and what the appraiser says the value is, a VA buyer, because they're already starting with nothing down, they're in a better position to make up any shortfall, assuming they want to, than maybe a regular buyer who is
Yeah.
already, is already earmarking money for a down payment, and now the appraisal comes in, and now they might have to be dipping into their pocket even more. The veteran is starting with a wide open playing field. So
Right.
yeah,
Right. And a lot of agents are confused by the VA mandatory clause because they've asked me, hey, when they sign this, if it comes low, they still have to go down. No, the buyer's allowed to pay. I've closed loans where the veteran paid more than it appraised for. They looked at it,
we've
they made an
definitely.
educated decision, and like you said, they've got funds. They're probably more likely to do that because they have funds set
Yeah,
aside, and they're allowed to pay more than an appraised for. That's
I've
okay.
definitely heard an agent come to me and say, "Well, a lender's telling me that the buyer is not allowed to pay more than the appraised value," and that's just simply not a
No, it's not
fact.
the case.
Yeah, no, that's not true. So
No, that's not true. So
it's
that's
a
a
it's a misconception.
Yeah, that's huge. So it's really just kind of educating people about these types of buyers and so forth. But so let's move to the next part. But the really cool thing about VA loans, assumability.
Yep. Also a very nice feature, and certainly if you're a listing agent, one of the things you would want to ask any of your sellers is the type of loan that they have on the property, because if that property is a VA loan or an FHA loan, then those are assumable, and you do not have to be, big misconception,
Right.
you don't have to be a veteran to be the assumer of a VA mortgage.
That's right.
So you could be out here right now as a regular buyer, and you find a property that you like, and you want to make an offer on that property, and it turns out, and the market rates today are in the sixes, but that loan on that property that veteran owns and is selling is at 3%. You could, if you qualify, you can apply and assume that 3% mortgage for that veteran from that veteran. You would just need to come up with the cash between the whatever's on that loan, the balance of the loan, and what the seller wants, or find out some secondary financing to bridge that gap, which
Yeah, and we can do that.
which we can do. Yeah.
Which we can do. So hypothetically speaking, let's say you see a home that's out there. It's being marketed as, hey, it's got a 3% assuable interest rate with 24 years left or whatever. The loan is 300,000. Property is being sold, let's say 450. That part out. We have a second mortgage product that'll help you, so you don't have to come out of pocket with all that money, but you will come out of pocket with, let's just say, a lower down payment than you would think.
Yes. Yeah.
And the blended rate between that first mortgage and that second mortgage, it's could be better than what the comparable rate is
It's
today.
totally worth looking at. But
Totally.
if you're, yeah, if you that's one of the benefits though. If you are a veteran, that when you go to sell, hey, if rates are higher than when you took out the loan, that's a selling feature for your property now too. So
Yes. But if that loan's still out there, that could hamper the veteran on the next deal.
true. Now, yeah, this is certainly one of the things that is people are sometimes unaware that if a veteran has used their eligibility already, then their remaining eligibility gets reduced.
Right.
But sometimes they can still, and then what happens is if they want to use it again, they can. They get bonus entitlement, and then there's a calculation that gets done. Sometimes they can buy another house where they don't have to put anything down. Sometimes they do have to put something down. It depends on how much the original loan that they took out is, and then how much the new loan is,
Yeah.
and the new purchase price is. So
It
that
is get,
that
it gets really murky at that point. That's where you got to contact us as the specialist
yes, yeah,
because it
we
gets
can tell
very
you right
confusing.
away.
Yeah.
So if we know what the borrower originally borrowed on the existing VA loan, and we know what they want to buy, we can do a calculation and say, hey, here's what you're going to need to put down on the new property, or what you don't have to put down on the new property.
Yeah.
We can do that really quick.
Yeah. Yeah. It's interesting, but it is a nice feature of the VA loan.
Oh yeah,
Yeah, yeah, and so another thing too, if you're working with a buyer, and then if they decide to sell in a couple of years, hey, hey, when you do your listing, this is a product that you
that's
can
it.
use to help separate your product, your home from somebody else. So Very, very cool. So let's talk about, one of the cool things about it you alluded to earlier is the seller concessions and what the seller can and can't pay for.
Yep, this is the most misunderstood thing about a VA loan that even some mortgage people don't understand.
Oh yeah, yeah.
So concessions. So this is if you go out and you poll loan officers even, and you poll realtors, hey, how much can FHA loans allow you to give 6% of the price as a seller to a credit as a credit to the buyer. Conventional varies depending on the down payment. If they're doing a small down payment, they could give 3%. VA, when you ask them, the most common answer that you'll hear is 4%. Okay.
Yeah.
But that is not the number. So a seller is allowed to pay for the buyer on closing costs and or prepaids. And this is the answer. Every red cent. All of it. There's no limit. So if
Yeah.
you've got a seller who wants to give a credit, if you can negotiate a credit from the seller to the buyer on a VA loan, there's no cap on closing costs and prepaids. There's not a 4% cap. There's not a 6% cap. There's not a cap. They can pay it all. 4% that you're hearing about is for other stuff that you can't even think about on any other loan program.
Right.
So the 4% is like for personal property.
Yeah.
Or the seller's allowed, so in addition to paying every red cent of the veteran buyer's closing costs and prepaids, they're allowed to give another 4% towards the payoff of a debt to help the veteran qualify, for example.
I mean, people, do you understand that if you're a realtor listening to this? Do you realize? I mean, granted, the house has to appraise, but the seller can pay can pay a judgment, can pay the funding fee if they wanted to, if
The
they have the
seller
funding
can
fee.
pay off the veteran's car to help them be able to qualify to buy their house. You
Yes.
can't do that on any other loan program.
No.
So you could say, hey, listen, I want you to buy the house at $500,000. Here's my price. I'm going to throw in these jet skis for you.
Right. Right. Right.
As long as the value of the jet skis is less than 4%, it's okay. It doesn't affect the loan. You really can't do that on other
No.
loan programs. So
There's nothing like it. There's nothing like this.
yeah, yeah. So that right there, that 4% really is for, and what you can do with it. When I said earlier that VA loans are one of the most deal-making loan programs out there, this is part of why I was saying that, because you've got buyers who maybe have more access to cash than they really need to do the deal, so it helps you with appraisal issues. But stuff like this, we've used it. We've had deals where in order to make the deal work, the seller paid off debt for the buyer to close, and
That's crazy.
it's amazing.
Because we see it all the time in our world. Hey, your debt income's too high. Can you pay this off? No, I can't pay it off. It's yeah. No, it's crazy. It's crazy. Now they can pay for all that stuff, but one of the things that the VA doesn't have the seller pay for is repairs. So let's talk about the
Sure.
with repair issues that comes up. The VA appraisal identifies repairs like safety features, et cetera, et cetera. How's that different from, let's say, conventional or whatever?
Yeah, I mean, I'd say it's fairly. There's not that much of a difference. Most of them concerned about safety issues and things of that nature. Um, I do think that this it's more of a seller is going to need to take care of this type of a thing on a VA loan.
Right.
And so, but that's yeah, but that's
And they can't. That's not part of the concessions. You know what I mean? People, I still have agents
right.
ask me, thinking, oh, they have to get this fixed, and no, that cannot be part of the concessions. That you can.
Yeah, no lender on any loan program really wants to see a credit for a repair. They would like to know that the repair is done. They don't want to get in, that's not typically, and so yeah, VA is no different in that regard.
Yeah,
So,
yeah. So they can pay for all this stuff, but don't put repairs on that on that.
yep,
So let's go back to the real world here. Let's see. Walk me through what actually works like on a deal. Let's say we'll start with the buyer side. So let's go with that, Craig.
yeah, no, I would say, if you're a realtor and you've got a veteran buyer, I would definitely make sure they can, connect them with somebody that's familiar with VA loans, that they're comfortable being able to go obtain a certificate of eligibility for the buyer. That's something that we do on a regular basis for people. Most veterans are not walking around with their certificate of eligibility. They
No.
have their DD 214 available, but with that information, we can obtain their certificate of eligibility very easily for them. So you want to make sure you work with a lender that can do that. And yeah, I would say, let me think here.
Well, I was going to interject, I think, because one of the things too is, of course, we're going to talk about us, Capital Partners Mortgage, and working
Sure.
with a local lender. I have had veterans, that have contacted me, and I bank at, I don't want to say who. There's a couple of big financial institutions where I hold my accounts. Okay,
Yeah.
um, and they'll pre-approve borrowers, but those call center types and those huge online lenders, and there's some big. I don't want to say the names. The issue with that, Craig, is the buyers. It's a call center.
Yeah.
Loan officers in another state. They might answer the call to get that. Once that deal gets in the door, you're going to have communication problems. Just that's my past experience, and that's the thing that we try to say. Hey, we're local. We're going to answer the phone. We answer all our questions. And there are a lot of agents out there because they've been on the listing side on one of these deals from one of these big institutional lenders that specializes in veterans, and it gives the VA loans kind of a bad name. Um, that's why you want to use us, of course. But
Yeah.
I just want to throw it out there.
Yeah. No, for sure. For sure. Um,
But so what are the other? What are some of the other things too? Is there anything else in the property? Oh, if it's we know it has to have the cleared semi report. If the property is not on public water,
okay.
if they're on a well,
Okay.
we have to have a
That's good. That's a
water
good point.
test.
That's a great
Yeah.
point, Bill. Is if you're on a well, then VA does require that you get a water test on the property, and it is something where you have to get one of these companies that specializes in doing these types of water tests. They have to come out and draw the sample. It can't be one where the sample gets delivered to them, and so that does come up. I'd say
And they're
most.
not plentiful. There's not a lot of these big companies out there either.
No, no, there's not a lot of companies that are specialized in that, but they're absolutely out there, and we know the people in our neck of the woods that do those types of reports, and it's very easy to obtain, but you just need to be aware of it, earlier on in the process, so you don't get surprised later on.
Yeah, if the home is located in maybe Western Palm Beach County or Western Dade County, that might be the issue. We don't really have that anymore in Broward. Everybody's pretty much on public water. Yeah, so that is something to be on the lookout for. So go back to the borrowers. We said that you're going to need your DD 214, which they should have. We will do the certificate of eligibility. So let's talk about property types. Now, I know one of the
Oh yeah.
challenges with property types with FHA is FHA and condominiums in Florida don't go well together. How does VA and condominiums go to?
So people get very surprised because they're especially agents who are in the business, they are used to knowing and used to having the impression that if it's an FHA and a condo, there's barely any. There's almost none. We actually are just about to close one, believe it or not, that's
Really?
FHA approved. But there are handfuls out of the hundreds and thousands of condos down here, handfuls that are FHA approved. VA condos, there's a lot more than you would think. And
Yes.
it's because once they get approved, they do not expire. So,
Yes.
so the requirements for a condo from VA are less restrictive than what they are for conventional and less restrictive than what they are for FHA. But it does have to be approved by the VA. And so it's not so simple like on a conventional loan where we approve the condo. When it's a if it's VA, we can't approve the condo. We have to get everything. We have to send it to the VA. The VA has to approve that condo. That's a bit of a lengthier process, but surprisingly, a larger number than people would even imagine are VA approved already, and they're not going to expire, and veterans can borrow in there readily.
Oh, absolutely. I
With
think in
nothing down.
Broward County, yeah, in Broward County, there's over 250 VA approved condos.
I think people would be floored to know that.
Yeah.
That there are
Yeah, yeah.
250 condos a veteran can buy in Broward County with
Might
nothing
be
down.
might be more. Might be near 300 last I
Wow.
checked.
Yeah.
So let's say I'm a listing agent.
Yeah.
Going on a listing presentation, I find out someone contacts me and says, "Hey, Bill, I heard this is a VA approved condo. What would we need as lender in order to close a transaction there? What do we need from the condo association or whatnot in order to close something?"
Really, on a VA approved condo, we just need to verify that they have insurance, and the insurance restrictions are not even like what they are on regular deals. So by and large, if it's on that approved list, it's still going to be okay for VA.
We just need to get the updated master insurance declaration page, basically, right?
Yep.
Wow, that's huge. And then you also mentioned something else, just to clarify. If a, let's say, an agent or someone wants to get a VA, get a condo VA approved, that is sort of a lengthy process. How lengthy are we talking ballpark?
It's not something, frankly, we've done very often, and I would say I would usually be telling people, hey, this is going to be a 45, 60-day process.
Okay.
Could it be less than that? It's possible, but
Right.
sometimes getting everything that you need out of associations or management companies is some are more readily available with the documentation than others. So
Right. That's the challenge. We have to obtain all the information from the condominium association. So
yeah,
okay, but just want to, because I have been asked that in the past.
Bill, as we're talking about this, one of the things that comes up that we really didn't talk about is how flexible the VA loan can be with the veteran in
Yeah.
terms of qualifying.
Yes.
So we talked about different ways that it makes the deal work. It's zero down, and the seller can give these credits. But just from an approval standpoint, the VA loan is much more flexible than certainly conventional loans.
Yeah.
And normally, agents are very understanding of the idea that how flexible FHA loans are, because you can
Mhm.
stretch the DTI ratio to
Right.
56% regular basis.
Right.
What they may not understand is that VA, you can do some crazy things when it comes to
Yeah. It's even
DTIs.
it's even way more flexible. I mean, first off, I mean the minimum credit score is like 500, right?
Right,
Right. No, you're not going to get something probably 500 credit score, no money down,
right,
with a huge debt to income ratio. Let's
right,
start with there.
right.
But the real big thing about VA is in the software. When we run the software, the debt to income ratio. I mean, I've closed loans with a 71% back end rate. I think I closed one time with like an 80% back end ratio. It was crazy, and it's way more flexible.
So there's this calculation that gets done on a VA loan, which is, and the reason that VA loans have a very good um, performance rate or a very low default rate is because there's this extra calculation they do for residual income. So there's a table based on how many people are in the household, and they say, hey, we want after the veteran pays his house payment and all his other debts, and they look at net income and they say we want them to have this much left over so they make sure they can pay their bills, and they have a factor in there and it kind of factors in for food and stuff. So because they do this calculation on a net income basis, it lets them be even more flexible on the DTI. So what you just said, and we've done it, and I marvel every time it happens, but a VA loan closing with a 70 something
Back
DTI.
end ratio. I know. Easy.
Yeah, I mean, I remember one that we closed that was at the time, this was a jumbo loan, but it was like an $800,000 purchase price with 5% down. I think at the time they had to come in with some of the down payment, and the DTI was 60%, and they had a 610 credit score.
Wow.
So
Yeah.
it can be
That's
very 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 flexible when it comes to helping the buyer qualify.
yes,
So yeah, so that's it's definitely, I maintain it's the best mortgage
oh,
program in
for sure.
in the world.
Yeah,
I'm going world.
and you think about it, if you're working with a VA buyer, and listen, if they have that type of income and they have the ability, hey, I can afford that monthly payment, and they qualify, God bless them, and they're putting no
Yeah.
money down too. So that's
And,
that's
and,
huge.
and it's also very helpful when you've got situations where people have some people have income that they can't qualify with
Yeah,
a regular mortgage,
right.
because they have a cash business. There's some things. It's not like, hey, the VA is trying to set these veterans up for failure, but they can see the performance history when certain situations line up. the credit, the residual income, and so they allow a lot more flexibility.
Yeah, and here's another thing about it. I'm going to bring up this up, kind of related to that. Let's say there's a veteran and he has a non-married spouse, and they're buying a home together. And that non-married spouse can't be on the mortgage because he's putting zero down. So maybe that debt to income ratio flexibility with the software kind of helps out. Now there are instances where somebody can buy a VA loan with a non-married spouse, but the down payment on that it's not. They get more. They get money down. I mean, I haven't done one, so.
Yeah, no, the what happens is in the VA in the world of VA loans, the veteran can only borrow with the spouse and get a fully guaranteed loan and do nothing down. And so you can't. Where on other loans, you're allowed to buy with your fiance or your brother or whatever, um, and also you can't get a cosigner on a VA loan like you can on some of these other loan programs which allow you to do that. So it's only a spouse, or if you're gonna get a VA loan with somebody that's not your spouse and not a veteran, then you're going to have to put more skin in the game because your loan's not going to be fully guaranteed. And so then you have to put a down payment down. So that there's a calculation that gets done,
Yeah,
um, and those
I'm
loans
not
have to
sure
get
how.
underwritten directly by the VA.
Yeah,
So it doesn't happen very often, but it can get done. But
I don't think they're very cost effective. Last time we checked, though, I just with the amount of down payment, you might be better off just going conventional or FHA route.
yeah, yes,
And I have had buyers, for example, I had somebody call me last week. This gentleman's 75 years old. He's a veteran, wants to buy a home with his daughter. No money down. I'm like, yeah, sorry, that's just not going to
yeah,
work.
yeah. And it's for primary residences, of course, we should say, but we don't think we have said that
Yeah,
it is for veterans to buy their primary residence.
veterans by their primary residence. Now, here's another misnomer. I've had a lot of people say, well, you can only have one VA loan at a time. There are instances where a
Yeah.
veteran can't have two VA loans at a time. There's criteria for that. Hypothetically speaking, what are some of those things, Craig?
Yeah, no, that's the one we were talking about earlier, where we just do a calculation. So they have to. There's part of their if they're not going to sell that property with the VA loan before they buy the new one, then they're using bonus entitlement, and so there's a calculation depending on how much entitlement they used on the first property and how much they have left over. Sometimes they can buy a second home with nothing down, and as long as the occupancy makes sense. I mean, usually when we see those people, they're usually into a new area.
Right.
But if they decide,
Expanding family size,
yeah,
being
yeah, but
relocated with a company or
yeah,
something like that.
it doesn't have to be a relocation though. I mean, they could have bought their first starter home and then a couple years later decide they want to move up and buy a bigger house, and it makes sense, and they've got enough bonus entitlement to do zero down again, and they can keep the other property and rent it out. They can do that.
Yeah. Yeah. So there's definitely a lot of options with that, but there's a lot of misconceptions on that regard. So, but really, really, really good stuff. So, anything else you want to talk about as far as VA? I mean, I think we've gone through a lot of stuff.
We have.
Gifts, gifts. It's kind of anything
Yeah,
about
no,
gifts.
you can get a gift on a VA loan. That's easy.
Down payment assistance. We closed the
You
hometown
can,
heroes. We
even
have
though it's zero down, you can
right.
still also tack on top of that the fact that you can get down payment assistance loans, and so you could get in with nothing. And
Yeah.
so, yeah, and you can get in with nothing even without the down payment assistance if you structure the deal where you negotiate with the seller to pay your closing costs, of which they can pay
Everything
everything,
plus 4%.
everything.
Yeah,
Yeah. So
and a car paid off.
don't forget the jet skis. Yeah.
Yeah, the jet skis. So, but no, it's a great product. A lot of misconception out there. We want people to know, hey, embrace this. If you're a realtor and you're on a listing site, embrace this. This is great. And if you're a realtor working with a buyer, embrace it. Your buyer could get qualified for more. It's a great product. Lower interest rate, generally speaking. This is a win-win-win for everybody. So don't be afraid of a VA deal.
For sure.
Yeah. So all right. Should we talk about mortgage rates today? We've the battle in the Middle East. The Strait of Hormuz is closed. It's open, and the rates are going up. They're going down. Yesterday we had some price deterioration. Today we got price improvement in the morning. It's like
Everybody's
no.
just waiting to find out what's going to happen there. And so
Yeah,
we will
yeah,
continue to wait. Thankfully, rates are uh, they're better than they were at their worst during this conflict,
Right.
and it seems like there's hope that we're going to move forward. The stock market has rebounded.
Right. Oh, wow.
And but I think everyone's still waiting for maybe another shoe to drop.
Yes.
So
Yes.
clarity there will be very welcome from all parties.
We shall see.
Yeah.
So all good stuff. So, all right, sir. Well, as always, another great product feature here.
Yep.
Great deep dive. Good stuff. And hope you have yourself a wonderful weekend. Hats off to you. And we will see you, Craig,
At the closing table.
at the closing table. All right. We'll see you soon.
Thanks, Brett.